Live from Music City, Nashville, Tennessee, this is your motivational, sensational, inspirational, educational, keenly awaited, highly anticipated edition of the Afternoon Swing Trading Floor with your humble host, Jeremy Alexander Newsom, with another daily dose of mentally delicious brain food, reminding each of you to love life, live life, and trade it. Traders from around the world, boys and girls, legends and legendettes, how are each and every one of you doing on this fantastic Monday? Today, of course, being Mentorship Monday. This week is a special week. Today is a Monday, as I already mentioned like 5 times. And this week is the open house, meaning the entire week for both the morning and the afternoon room. They are entirely free and open for every single person who wants to attend. So for those who are here live, thank you so much for being here. And for those who might be watching the recording, hello in recording land. Thanks for being here. There's so much to talk about, and I'm pumped. ML Trade says, hello. Justin says, hey, everyone. What's going on? Jill, how are you? Maurizia, thanks for being here. Mark, what's going on? Mr. David Franklin in the building. How are you? Brad. How's it going, Brad? How's the Nashville weather your way, man? It's beautiful over here in Brentwood, especially today. Had a little bit of pool time today. If you got a chance to notice, my skin's a little bit darker than it was this morning. I'm just kidding. I don't know if I got a tan or not, but it was a really nice day. So what I want to do for the first, really the 20, 30 minutes, oh, wow, it's way too long. For the first 3 to 10 minutes is kind of discuss a little bit about how the afternoon swing trading works. It is kind of different from the morning trading room. Then we're going to discuss, we're going to kind of look over some trades that we're in, and then we're also going to talk about the topic of today. So today, for Mentorship Monday, it's designed to go a little bit slower pace, ask a lot of questions, and you'll receive a lot of answers. So today is that day. If you have questions or you want to ask questions, today is the day to make that happen. So let's get started. First and foremost, what's kind of the overview and how does the afternoon trading room work? Well, the afternoon trading room is entirely from requests. So a lot like your real life stock reviews, traders give me requests on stocks they want to look at, and we review them. I also look at stocks that I personally have an interest in some form or fashion, either long-term, short-term, something to that extent. But we take a lot of requests. Monday, if it's not Mentorship Monday, Monday is usually Merchant Monday. That's when we look at retail stock most of the time. Target, Walmart, Best Buy, CVS, Whole Foods, Costco, Amazon, stocks like that. And then Tuesday is Tech Giant Tuesday, which is going to be tomorrow. Now, you guys are all going to love that program. I'm positive of that. Tech Giant Tuesday is where we look at all the tech stocks, right? Apple, Amazon, Google, Facebook, Twitter, all the big names. Wednesdays is when we review the energy sector. Now, again, we can look at any stock that we want during this time, but overarchingly, we usually look at some of these stocks in this particular sector. So Wednesday is Energy Wednesday. And then Thursday is Transportation Thursday. So Transport Thursday, where we look at stocks like American Airlines, Tesla, General Motors, Honda, Ferrari, so on and so forth. And then Finance Friday. So Friday, we look at a lot of the financial stocks. What's the dollar index doing? What is gold doing? What is silver doing? Bitcoin, some of the banks, so on and so forth. So that's kind of what Finance Friday is about. So those are kind of the overarching big picture sector analysis that we look at each day. And as a reminder, I often take requests from the traders who are here, and we go look at those stocks. We cover a wide array of topics every single day from 5 to 6 Eastern Standard Time in the afternoon swing trading room. Everything from option selling to option buying to stocks to covered calls to short-term swing trades to long-term swing trades to investing. We cover a huge spectrum, which is fantastic as a learning experience, right? We'll talk everything from leaps to synthetic longs to ratio spreads to directional shares, right? We cover all of it. And it's, again, a great place to interact, to ask questions, to learn, to grow. And I do record it every single day. So for those who can't make it live, I'll be recording it all this week and sending out to everyone this week. But next week, right, closed doors again. And for those traders who want to continue to join us, I'll be sending out those recordings each and every day. Yeah, so that's pretty much about it. That's the broader markets. Now, the best way to really get the most and the best experience out of the afternoon room is request a stock and or a trade setup that you're interested in. Let me review it for you and let that analysis kind of sync and merge with what you're looking at. The second best way to really get the best out of the afternoon trading room is pay really close attention to what I say. As you obviously know, this is an educational experience and format, so I'm not taking or trading your money. So when I take a setup, I'll say things like, hey, if the stock pulls back to this particular level, we're looking at getting in bullish, right? So if I say something to that extent, you can jot down that note. Okay, this is at least the price he's looking at getting in bullish at. There are going to be some trades that we make official. Official trades mean that we are taking the trades, watching the trades, keeping track of the trades, and this is where we keep track of those. We're going to be looking at some of those today. But this is where we keep track of the afternoon swing trades. And again, these trades can be stock or options. This is the swing trade log. And since we've started it back in 2015, July 2015, so 2 years ago, we got about 52 R's in the swing trading. Here's the swing trade results. So you can see the swing trade results. And I tell people this very often, 3 out of 12 months, if you're swing trading, is usually the timing where you're going to get the most returns on your swing trades, 3 out of the 12 months. And unfortunately, I never know which months those are going to be. I wish I did. Usually, they're around November, December, February, March. Those 3 months in that sphere of the calendar is usually where most of the profits are made. This year so far, we're actually just slow and steady. March was a really good month for swing trading. It was terrible for day trading, but it was a good month for swing trading. And that was been the biggest month so far. Last year, we had January was a good month, May was a good month, and July was a good month. And the year before that, July, August, and December. Those are the best months in 2015. So we keep track of it. And again, these particular numbers, these are the numbers that we're going to call out. We're going to be very, very specific about what trades we're tracking, what we're trading, where we're trading it, why we're trading it, all that kind of good stuff. So that's just a swing trade log to keep track of. We also do credit spreads in the afternoon room. So here's the credit spread logs, and these are every credit spread that we've placed since February 2015. And here's the credit spread results. So this is just in case you get scared by a huge number. This does not mean I've taken my account and multiplied it times 8 since 2015. That's not the case at all. What that means simply is based on the risk that I put up on options and on credit spreads, I have increased 800% times the risk on my overall credit spreads that we've placed since 2015, which obviously is not bad at all. And we keep track of the losing months, we keep track of the winning months, we keep track of every trade. So this is an actual worksheet that if you ever decide to join the Real Life Trading group and family and community, you will receive access to this worksheet. And also here's our Slack channel. Mark says, what is the correct code for the afternoon swing trading? Can you post that in Slack for you, please, Ashley? Let Mark give that to him. So yeah, so this is Slack. So this is our social media channel, which again is an exclusive channel for anyone who trades either in the morning room and or the afternoon room. And again, we're always posting trades, trade ideas, thoughts, questions, concerns, setups, all that kind of good stuff. So anyway, that's just comes along with the access to the trading rooms. All right, let's just go ahead and dive in then. We're going to look over the trades that we're in presently, just so you guys can get an idea of what we're currently trading, how we're trading them. We're going to look over the swing trades that we're in, the credit spreads that we're in, and then we're going to talk about margin. And if you have any questions pertaining to margin, feel free to let me know. You can write in the comment section below if you're watching from YouTube. If you're here in Zoom live, you can put in the chat pane, or you can email me after the show, jeremy@reallifetrading.com. Tomorrow, though, is when we get into it, right? You can still ask questions tomorrow, but tomorrow's Tech Giant Tuesday. We're diving in hardcore. We're going to be looking for option trades, stock trades, credit spreads. Everything on the board is a possibility. We're going to be looking at all of it, and I'm pumped. So let's go make magic. First and foremost is Trivago, ticker symbol TRVG. TRVG. We've been in this trade now feels like too long. We got triggered into this trade back here, whatever day that was, late May. And it had a few times where it was spiking nicely above our entry and it was working out pretty well. But at this particular point in time, it's not really doing anything. So I mentioned back on the 2nd, of June that I wouldn't touch it until 6/13. And 6/13/2017, which is tomorrow, I believe, right? So tomorrow I'm going to increase the stop to, let's see, I'm going to increase the stop to about 1788 tomorrow. So that way we lose less than an R on that particular trade on Trivago. So again, if you're not in this trade, it's not looking that great. We will keep our eyes on it. We might set it up for another opportunity for it to trade down to the 50 and then bounce. So we will keep an eye out on that to see exactly what transpires. But for right now, it's not looking that wonderful. Next trade we are still in is Macy's. And Macy's, this is a bearish trade. So Macy's, this was pretty simple, just looking at shorting old support, new resistance. That was really all we did. So you'll notice you had a very, very nice gap action right there. White candle gapping down, it was a gap and go. Had a lot of selling, rotated to the moving averages. We broke lower. And now I'm just looking for it to trade into old resistance, new support, which it did. Victor, let me see if Victor is here. Victor, my man, you were asking about the target. I said 21, and I meant to post 19. I'm sorry about that. So if you want to update that in your trade, I know you're asking about what the target was, 1919, it would make sense. Yep, you're welcome, my pleasure. Linda says, do you enter on the hourly time frame? Yes, most of the trades we place, we talk about on the hourly charts, Linda. Yes, ma'am. So this trade, we're already in it. If you want to look at it on the hourly chart, here's what it looks like on the hourly time frame. And the hourly chart on Macy's, not saying the trade's going to work, but what I do like is this pennant pattern right here. So you have this pennant pattern kind of building. So if Macy's breaks down really below 22.40, I think this trade should work. And from that point in time, I think we can lower the stop from where it is to approximately right above that pre-market high that kind of formed today. And so that way we can lose less than an R. We'll probably do that at some point later this week. But we are in Macy's bearish, entry 2281, stop at 2462. Now the other trades we have open are MCK and Zoe's. So let's go look at MCK. And MCK, we're looking for a pretty aggressive trade. So you'll notice back on the 9th of June, I wrote in, the 9th of June obviously is Friday, large chance you're going to lose. That's what I wrote on this trade. So that way I'm just kind of prepared for it if it happens. What I liked about this trade is you had a beautiful bullish gap and go right there on the daily chart. So if we zoom out a little bit, you'll notice you have a really good resistance right here. We gapped above that resistance with a beautiful bullish gap and go. You had a nice little trend. Trend came in, we traded down to the 10, and we kind of started bouncing. So all of this trade is us looking at buying off of the 10. Will we know for sure if that trade's going to work? The answer is no. Based on today's volume and candle, it looks like the trade is probably going to lose, which is fine, right? Just losing an R. So what I'm going to do is I'm going to come in here and update that trade to make it active. Active means that we are in that. I just didn't get a chance to do that earlier today. So 162.79. So MCK, here's the weekly chart. And the weekly chart, you'll notice a lot of white candles in a row. 1, 2, 3, 4, 5, 6 white candles in a row. And that's why I expected this pullback to happen. That's why I did a limit buy. Here's the hourly time frame on MCK. And it looks a little head and shoulderish. Let me put the long-term moving averages on and just see where those are at. So we're kind of below the 100 symbol. Let me turn the extended hours off. Yeah, it looks all right. We'll see if it works, right? Who knows? One candle can change everything. So we pulled down to the 10. I really did like this new white soldier candle right there. So that new white soldier candle. And then the other reason that we placed this trade is, remember, Friday was a really bearish day in the market, more or less. And this stock didn't care. It was actually a pretty bullish candle on Friday. So my thinking was, hey, this trade, might be trading different than the broader markets. So let me see if I can enter this trade on a pullback. So that's what we're in on MCK. And the other one is Zoe's Greek restaurant. And this one has not triggered yet. So if anyone is interested in this particular trade, this is a black candle gapping down on the daily chart. So black candle gapping down. It is a retest gap. So this right here is the retest. We can see this sideways consolidation pattern. Don't know if the trade's going to work or not. But what we got is we got it set up to sell short at a stop limit entry of 14.18 with a stop loss at 15.05. And we plan on exiting this at a 1-hour gain. It might get a little bit better. I will say the longer Zoe's trades sideways, the longer I might plan on trying to trade it all the way down to here. The reason I want to exit on a 1-hour gain, if I'm being really upfront with everybody, bearish trades have been terrible for like the last 3 months. It's been pretty bad. We've tried taking a lot of bearish trades. I shouldn't say a lot. I don't know. We've probably tried taking 7 bearish trades over the last, I don't know, 3 months, and they really just haven't been working. So usually if I have 4 or 5 bullish swing trades open, I really do want to have at least 1 bearish trade open just in case. So this trade is still open. It has not triggered yet. I wouldn't do this one with puts personally. I'll be looking at more of the shares on Zoe's, but we'll see what transpires. So that is still open. It has not active, has not triggered yet. Now, if we go to the credit spreads current month, we have MetLife, which MetLife expires this Friday for me. So if you're not in this trade, it's too late. You missed this one. I posted this one actually on TradingView back on May 15th, 2016. Jeff says, hey, Jeremy, I made it. Welcome, my friend. Thanks for being here, brother. So MetLife had a beautiful double bottom. Really, this one bounced off a bunch of moving averages. Here's why I placed this bull put spread. Long-term moving averages on the daily chart. So I love using long-term moving averages. My strategy for long-term moving averages is credit spreads usually. So I base a lot of my trade decisions when I'm doing credit spreads off of what the long-term moving averages are doing. So we'll notice here on the daily chart, we trade down to the 200 simple on the daily, and we also trade down to the 200 simple on a weekly chart. So that's why I did the credit spread below those prices. That expires, hopefully worthless, this Friday. Had SSYS, I've already closed out of that one. And then BABA, not going to have any problem with BABA. Got into BABA a while back, and this is a really, really pretty gap. But we got into BABA sometime back in here. I forget the exact day. In fact, I can actually look at it. I'll tell you the exact day. June 1st. We got into BABA June 1st with a bull put spread. So June 1st was, yeah, pretty much this purple arrow. So this gap up is just going to help that spread expire worthless. My buddy Niels is in a put sale. This is a naked put, which means he does not mind owning shares of the stock. So he sold that put at 114, and that expires the 30th of June. You'll see likely a lot of put sales on the chart this week. So this is also a fun strategy a lot of people know a lot about, and it's at least a fun one to discuss and talk about from time to time as well. So anyway, BABA, good bull put spread, things looking pretty. I dig it. So that's the bull put spread on BABA. And then Disney, ticker symbol DIS, we posted this one back on the 9th on Friday. A Disney July week 1, 101, 100 bull put spread. We did trade Disney for a very small gain today in the morning day trading room. But as far as the bull put spread, credit spread goes, 101, 102, that did fill. So if anyone's keeping an eye on that one, so far looks pretty decent, and we'll see what happens. But you'll notice only 5 credit spreads open. Well, technically, we had 5. There's only 3 open: MetLife, BABA, and Disney. And that's because the premiums are pretty deplorable for options for the majority of trades out there. So the majority of trades out there, option premiums are pretty bad. And that's because the VIX is so low. Even though the VIX did have a small pop today, we can go look at that really quick since I'm talking about it. Here's the VIX, and the VIX is pretty much the indicator that helps people analyze how much volatility are in options. So in this situation, you got a little bit of a pop Friday, obviously, when the market tanks, but the VIX has not moved up nearly as much as traders thought it would. Check this out. So if we're looking at the VIX, and this is because the S&P didn't go down that far, one of the reasons why. But notice this big flash sell-off and this one that happened on Friday. Let's talk about this for about 30 seconds, and then I'll get into today's topic. 30 seconds, maybe it might be 2 minutes. So the discussion is, when the market gets this quote-unquote sell-off that I think a lot of people are expecting and anticipating and waiting for, I don't think it's going to be a bear market. I think we're going to sell off kind of like we did in 1987. Does anybody remember what happened in 1987? So when the stock market dropped 30% in one day. I think if that's possible in 1987, that's very, very possible present day. So if we hop over here to the SPY, the big day that the VIX had a good pop was this day right here. We didn't really get a big increase in the VIX or option volatility on Friday. I think whenever we get the pullback, the one that everyone's waiting for, you guys want me to give you an honest, shocking opinion of what I think happens? And again, I'm really not a perma bear by any means, but I think this just makes sense. Let's say we do something like this. I think we do something like this in about the course of 3 days. I know that might scare a lot of people, and maybe it does. Probably it should. But think about it, with social media and how quickly people can react to news these days, and how much news people have at their fingertips, and how they can make an impulse sell super, super fast. That selling, I think we got a glimpse of it the other day. When this market really gets ready to sell, I don't think there's going to be much stopping it. I think that this is a very, very, very strong bullish market. And I don't know if there's going to be a catalyst, so to speak. I don't think there's going to be like, oh, we're at World War III now, and the market starts going down, right? I don't think that's going to occur. Now, again, that's just my opinion. For me, and I've been saying this for a long time, and a lot of the traders who follow me at Real Life Trading, you kind of got my opinion on the markets. I don't think the markets have a crash, if you will, until the market gets parabolic, until it gets in this hyper active bullish stage, when everything you hear on the news and on TV and on Facebook and on Twitter is bullish. When that one friend from high school that you don't really like calls you and says, hey, you should buy this stock. What do you think about the stock market? That's about the time when you should start getting concerned. When everyone's really bullish and you can't lose money and everyone's talking about the markets, which I think is actually around the corner, and a lot of people do as well. I think it's going to hit a target and then just without warning, boom. David says, so would a 3-month bear put spread be appropriate to hedge this uptrend? Yeah, I think a bear put spread is good. I like a bear put spread as a hedge. I think really the sell-off that occurred has already happened. These three and the bigger ones around the corner. So I don't think the hedge is necessary yet because we're still in a bullish trend. We haven't gotten any signals that are super, super scary at this moment in time. So this candle was a little concerning, but worked out. This candle, same thing. And this candle, honestly, is not that scary to me. It happened at an all-time high. It makes sense that people sold. I think we retrace, and again, I think it's a great buying opportunity. Coming into August, September, if we make a new all-time high in the market, here's my thought. If we make a new all-time high in the market before August or September, yes, I think it's a great idea at that point to start hedging yourself, because historically, September and October are the weakest months of the year. And I'm a big believer in Santa Claus, simply meaning in the market, there is very often a Santa Claus rally. So I'm thinking we get a little bit of a drop, we pop, we make new all-time highs, we get a much faster drop, and then the Santa rally comes in, and then things just start going bananas. That's kind of what I'm guessing. And then 2018, early 2018, if we're going to get any kind of pullback, It's going to be a really quick one. It's going to happen within a week, and then it's going to be over, right? So remember, bear markets, as much fun as they are to trade, they happen super quick, and you don't want to bet your life savings. You don't want to spend every single day hoping and praying that they're there. Trade the bull market, protect yourself in the bear market. That's what billionaires do. Okay. Yes, there are every now and then some billionaires who can make a lot of money on that one big day. There's also a lot of people who can lose a lot of money on that one day, right? So just something to keep in mind. Don't worry about the crash to the extent of every day you're looking at playing the downward move. Keep trading this bull. It's solid. Stick with it. Buy the dips, buy low, sell high, that kind of thing. And as we start approaching, when you get to a really comfortable level, peel off some risk, protect yourself from the downside, that kind of thing. And that's why we're here every single day, because when it does happen, when I get that one phone call from that one person that I'm waiting for that call to be, I'll let you guys know. David says, is the bond market a positive indicator the trend is petering out, and at what level? It's a good question, David. As far as the bond markets, usually bonds, they're trading higher. Equities trade a little bit lower in the majority of instances. But if we hop over here and look at the TLT, we are getting a little bit of a bounce, right? But that was needed and expected and anticipated. So the bond market pooped its pants in 2016, came down to a really good support level. We're just kind of accumulating down here. As boring as bonds are, as interest rates go up, bonds will get a little bit better, more than likely. And at one specific situation, I think it will help equities trade down. So we'll just kind of have to see about that. But for right now, I don't think it's around the corner. It's going to be interesting to just keep an eye on the bonds. I don't think bonds is going to be what causes the flash crash. I do think that's what's going to happen, though. I think the crash, personally, is not going to be a bearish market. I think it's going to happen within a week. What week is it going to be? What's it going to be attributed to? I don't know. Maybe it's attributed to a tweet. Maybe it's attributed to the Prime Minister of England saying something. Maybe it's attributed to the Nashville Predators losing the cup. I don't know what it's going to be attributed to, but I think it's going to happen really fast, kind of like the tech bubble, and I think we're getting glimpses of it recently. Avery says, where's this website going to be? I'll let other people know this week. I appreciate that, Avery. I will put it on YouTube on the website, and I will email it for you. I'll put it everywhere you want it to be. Letterman says, are you still sad about that? You know, I cried, but a man tear. I cried a man tear. Let's do this before we really get into the discussion on margin. Which stocks, and give me about 6 seconds to pull this up. I want to talk about which stocks you want to look at tomorrow being Tech Giant Tuesday in the afternoon. And then I have a poll for you guys to vote on. And then we'll talk about margin. That's what I want to discuss today in Mentorship Monday. Every Mentorship Monday, we have some type of topic relating to something that people are interested about. So that was Mentorship Monday. So what do you want to look at tomorrow? Tomorrow from 5 to 6 Eastern Standard Time. Remember, this show is based on a request. So you tell me what you want to look at, and we'll go look at those. All right, OLED, Apple, AMD, FireEye, GIMO, Nets, DFS, DVAX, TWLO, Marvel, Amazon, Micron Technology, Baidu, AMAT, Texas Instruments, Facebook. I already have Micron. BlackBerry, Microsoft, Nintendo. All right. NTDOY, Nintendo. Got Texas Instruments, AVGO, Yelp, SSYS, Momo, AMBA, and IBM. IBM looked pretty strong today at one point. Okay, why is my typing off? Boom, 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 boom. All right. DY, SWIR, Juniper, and Netflix. Good list for tomorrow. I like it. Okay. Got it. Perfect, perfect. Next is the poll. So for those of you who are here, if you're watching on YouTube live stream, you're not able to really interact with this. I don't think, and I apologize for that. You might be, but I don't think you can. For those who are here live, I do want your vote on something. Let me talk about what it is. So on Snapchat, most of you are familiar with Snapchat IPO came out. Type in a 1 if you remember me talking about this. I said Snapchat was going to be below its $17 IPO price by June the 3rd. And I got close. So this candle, the low of this candle occurred on earnings. We did have puts on Snapchat over earnings. The low was 17.59. The low of today was 17.56. So theoretically, we did not get below 17. We got close, but I did lose my wager. As you all know, the traders here in real life trading are ruthless when it comes to wagers. It's got to be to the penny and to the day in order for me to win. So granted, even though we made money trading Snapchat bearish, I still lost the wager, still irrelevant. And I had a wager that said I would sing a song, which I don't sing very well, and you guys would get to choose the song. So here's what happens from here. I've got a poll, and for the last 2 weeks, we've been collecting songs from traders in their rooms asking what you would like me to sing. So we got about 10. What we're going to do is I'm going to launch this poll, and I want you to select which song you want me to sing. So I'm going to launch that poll right now. If you are on YouTube stream, you might be able to see the poll, but I don't think you're going to be able to vote on it. Take time to read it over, and then I will answer Tim and David's question about Snapchat. So read these over. We got Barbie Girl by Aqua, A Boy Named Sue by Johnny Cash, Black Eyed Peas, Octopus Garden by the Beatles, The New Sneakers, I don't even know who that is, The Gambler by Kenny Rogers, Happy by Pharrell, Paul Anka, Call Me Maybe by Carly Rae Jepsen, or My Heart Will Go On by Celine Dion. It's a good list. What does this have to do with trading? Absolutely nothing. I just like to have fun, and you know, I like to challenge my traders and myself to create and find funny new things to do and talk about and all that good stuff. So most of you have already voted, about 50% of you. So let me keep the poll open. All you gotta do is click on the button, doesn't cost you anything. Let's keep this open for 5 more seconds. Well, I'll do 10 more seconds because there's a lot to read. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. All right, poll is over. So here's the results of the poll. Results of the poll, the top 2 winners, My Heart Will Go On by Celine Dion, and I'd Like to Teach the World to Sing by the New Sneakers. Interesting. I don't even know who the New Sneakers are.
The New Seekers.
The New Seekers. Oh, sorry.
It says, right?
Yeah, it does. It's dyslexia going on. All right, so I'm going to take a picture of that. Cool. Keep your eyes peeled this week for something to happen with one of those 2 things. It's going to be embarrassing. I sing terribly, but life is what it is. David says, what's the weekly chart look like? On Snapchat, not that much. There's not tons of candles here. Here's what I will say. Let's talk about some important sentiment really quickly on Snapchat. Ladies and gentlemen, are we at a location where we have bought before? Jill said, where were you seeing this song? Probably just going to record it, Jill, and just send out a video, more than likely. I'll keep you posted on that. But you'll get it, don't worry. I will send it to where everyone can access it. Jeff and Jeff, 2 Jeffs, say yes, we have bounced here before. Absolutely, totally. So we are at a support on Snapchat. Now, the interesting thing is with these 2 candles, the highs of these 2 candles are almost the same, which means this is almost a Morningstar reversal. So could you go bullish on Snapchat down here? Answer is yes, you definitely could. Let's see, I can put that maybe right about here. And we could do a stop like this. That could be one potential bullish trade. Now, who's asking about the lockup? Tim says, what's the sentiment of the people with the lockup expiring? So when the lockup expires, a lockup is when you have a new IPO and employees who work for the company, they can't sell their shares until a certain date. Because obviously once a bunch of employees start selling, usually the stock goes a little bit lower. Fundamentally, Snapchat is pretty rough. They're not making money. Their earnings was terrible. And with that being the case, could this thing bounce? Absolutely. Am I going to personally play the bounce? No. I would like to see Snapchat burn all the way down to $9 or maybe even lower. Am I going to miss out on the trade if it bounces bullish? Yes. What if, Jeremy, it breaks bearish? All right, then I'll be more excited about it. Why do I refuse to play it bullish? Because I'm weird, semi-eccentric, and I only play certain stocks the way I want to play them. Is Snapchat going to bounce? I know a few people who are ready to play Snapchat bullish. Go for it. Make some money. I'm just going to stay on the sidelines because in my mind, I don't know how Snapchat's going higher. Even though it's just buyers, people buying, demand is greater than supply. That's how it's occurring. I'm not entirely sure. Other than that, the earnings were so deplorably awful. I just don't know how people can buy this thing. You did have a bearish candle gapping down into a support, and then this was the retest right here. So we did complete the retest. So for those of you who trade this quick 4 to 5 day bearish move, congratulations. Let's talk some about margin since we're here on Snapchat. My nose is super itchy today. Margin. There's a term out there called, it's pretty popular, that margin is a double-edged sword. And what that means simply is that if you can make more money with margin, what else can you do with it? Well, you can also lose more money with margin, right? There's only really, to my knowledge, 2 types of accounts. And if there's another one, let me know. But you have a cash account and you have a margin account. When you trade a cash account, this is your money. Your money is in the account. So if you got $10,000, that's all you got. That is it. Welcome to the club. Or if you have $1,000 or $100,000, however much it is, if you got a cash account, that's all you can trade. Most margin accounts, most brokers will offer a 1 to 2 margin account. The vast majority of brokers will offer a 1 to 2. In fact, I haven't personally run across any that doesn't. If you're an international student and you're listening to this from somewhere other than Canada or the USA, you might have some different brokers. I think Interactive Brokers still offer 1 to 2, but I don't really know the rules and regulations on most of them. I know that you can just trade CFDs, so it won't really matter about margin. But regardless, 1 to 2 margin is pretty common. Then some brokers offer 1 to 4 margin for day trading only. Day trading only. And what can get you in trouble with this is you need a certain amount of money in this account, a margin account. You need $25,000 or more in order to trade, to day trade more than 3 times in a 5-day period. Otherwise, you'll get flagged as a pattern day trader. So if you do have a margin account and you're using the 1 to 4 margin, technically, if you got 10 grand, 1 to 4 margin is actually 40,000 bucks. That's a pretty good chunk of change for you to day trade with. But that $25,000 is not counting the 40. What I mean by that is you have to have, you personally have to have that 25K in the account if you're going to be doing day trading. Otherwise, you will get flagged as a pattern day trader, pattern day trader. So that is something that you're going to need to keep an eye out on. Now, I had a lot of traders ask me this over the weekend, and this is why I'm bringing it up. A lot of traders ask, per my R, do you base your R off of your buying power or off of your cash that you have? Dave says, for a cash account, can you day trade? Yes, you can. So what do you guys think? Should you base your risk value off of your margin or off of your base amount? And my answer is off of your base. off your base, because that's how much money you actually have. Okay. The margin's cool. There's nothing wrong with margin. I love margin. And I agree, it is a double-edged sword. If you don't know how to properly trade with margin, you can lose a lot of money. The challenge, of course, is understanding that margin is a good thing, I feel like. Margin helps you take more trades, lets you be in more opportunities where you can make money. And if you know how to mitigate risk and you follow that risk mitigation, right, AKA you have stops in place, right? You have stops in place. It can really allow a massive amount of leverage to come your way. For example, if you only have a $5,000 account, okay, but you have $10,000 in margin, let's talk about how one would go about doing this swing trade with a $5,000 account. So if you're doing a swing trade with a $5,000 account, based on most risk management principles, most traders are very comfortable in the 1% to 2% risk range. I say if you're a younger trader, aka a newer trader, aka you haven't been trading that long, go with a smaller amount, 1% or lower. So Thomas said, any reason why you'd use less than 1% of your account? Yeah, if you're just a newer trader or you have a bigger account. If you got a really, really big account, Thomas, I was mentioning in class 3 of the day trading class that I have a trader who has $1 million account and he didn't want to use $10,000 as his risk. So I was like, that's totally fine, dude. You can use whatever risk you want. Just make it a nice small amount. So he's doing $2,000 of his $2,000 is his risk, which is 0.2R, 0.2% of his account. So he has $2,000. He has a little bit more than $1 million. And anyway, that's what he's trading with off of his risk. David says 1% equals 1R. Exactly. So 1% is your risk. That is your risk unit. How much money you are going to lose if you're wrong. Not how much you're going to invest, but how much you're going to lose. So in a $5,000 account, let's talk about how much you would risk. So 1% of $5,000 is $50. You guys following me on that so far? $50, $5,000 account. How would you take Snapchat? Well, first of all, this entry would be a stop limit in your broker. Stop limit. That's how you would set the trade up in your broker. And you would have 18.59 as the actual stop and 18.59 as the entry. And this will be your stop loss. So you would take 18.59 and you would subtract 17.42 and you would come up with $1.17. This is called your stop value. This number is very easy to obtain. Simply take the difference between whatever your entry price is and whatever your exit price is for your stop loss on whatever trade you're looking at. You then take your R. Now remember, this amount is predetermined and it stays consistent for a while. You want to keep this number the same until this starts growing. So once your account is, let's say $10,000, you don't really want to trade with a $50 R anymore. So $50 divided by 1.17. And you're going to come up with 42 shares. Technically 42.7350427. So you would trade, in this scenario, you have a few choices. You could trade 42, you could trade 40, or you could trade 43. Why 40? Just round down if you want. That way, you would lose less than an R, more or less, for sure, if the trade goes south. You could round to 42 or you could round up. Either one, right? I think most traders get that. If you want to round down, round up, you're more than welcome to. So that'll be a $50 R. Now, how much would that trade cost you? Well, if you have 42 shares times $18.59, that is only going to be $780. So all I'm getting at is, I personally feel it's untrue that you have to have a big account to trade stocks. There's a lot of people who often say, Jeremy, I only have $5,000. I need to learn to trade options because I can't trade stocks. And I say to that, I don't believe you, bro. Sorry. You just want to make more money quicker, right? You could be in this trade. You could have made from here to here on Snapchat. You could have made $100 taking that trade right there with a $5,000 account. Sure, it's not glamorous. I get it. If you did take that as an option trade, maybe you could have made $1,000. I understand. But you've got to learn how to trade stocks before you can trade options. It's just that simple. In my opinion, in my view of the world, you've got to learn how to trade stocks before you can trade options. So in this particular situation, you would have had the money to take the, or you would have the money to take this trade. Well, what if you take Snapchat, SNAP, and this MCK trade that we're looking at? So let's go over to MCK, and let's say you wanted to take this bullish entry as well. Linda said, how do you get $780 again? That's just the amount of shares times the price that you're willing to buy the stock at, Linda. So we wanted to buy 42 shares at $18.59. 42 times 18 equals 780. All right, that's just your investment amount. So for example, let's practice MCK. So let's say you have a $5,000 account, $50 R. All right, let's take the difference between these two numbers. You're going to get a stop value, 162.79 minus 159.52 equals $3.27. So $50 divided by $3.27 equals 15 shares. Linda, how much investment would this require on MCK? So 15 shares times 162.79 comes up with $2,441.85, not including commissions. So, I mean, think about this. You have a $5,000 account, and we can already take 2 trades. One that's a $160 stock, and the other being Snapchat. And you still have room left over. So is it true that you need a big account in order to trade stocks, ladies and gentlemen, or is it just in your mind? I'm doing these examples because a lot of traders, this is the number they don't like, the $50. They don't want to only make 50 bucks. That's what annoys them. They're like, Jeremy, this is the stock market. I want to make $10,000 by Saturday. I know you do. I get that. Everyone wants to, buddy. It's not just you, right? Trust me, it's not just you. Everyone wants that. It takes time, effort, energy, hard work, progress. You got to build up to it. You got to get there. Brenda says small gains add up. They do. They really, really do. They absolutely can add up. And the beautiful part about this is going through this regimen, we can scale down this exact same trade to an hourly chart, and you can actively trade an hourly chart the same way. And this is what I talk about in the in my intermediate program. But in the afternoon swing trading room, watch really closely for the next week, because I will zoom in to the hourly time frame a lot and kind of show you and help you out with your entries and exits. And then we're going to talk about commissions, because I think that's a big deal. But let's say you want to take this trade right here on MCK. So MCK, you have a resistance right here. So old resistance, new support, white candle gapping up was a retest gap. So as it's breaking out, you're planning on taking the retest. So in this situation, let's say you had an entry here and you had a stop loss somewhere in the gap. So now your stop is 156.50 and your entry in this scenario would have been 158. So that is $2.50 worth of stop value. $50 divided by $2.50 equals 20 shares. 20 shares times $158 per share is still $3,160. Again, all I'm getting at is you can still trade this. Is $1.50? Sorry, 50 divided by $1.50 is 33 shares. 33 shares times 158 equals 5,266. And there we go. We finally got to the margin. We finally got to the margin, 5,266. So if you had a $5,000 cash account and you wanted to take this trade, 266 of those dollars would be on margin. The broker interest rate on margin is almost free money for the majority of trades out there. For the majority of brokers, I'm sorry. I think Thinkorswim, Interactive Brokers, they're all under 2% annually. Annually, not daily, annually. So if you're using the broker's margin, right, if you have a stop, a lot of people are terrified of what's called a margin call. But a margin call only will happen when either your exposure on a stock is more than the amount of money that you have in the stock, or you're negative on your account and the broker knows you have liquidity to add to your brokerage. So they call you and say, hey, you need to put more money in because one of your positions is going against you. The best way to experiment with margin is to tiptoe into it and just have small exposure. The best way to do that is usually to take 1 to 3 swing trades. 1 to 3 swing trades. Well, let's say you have a $5,000 account. One trade is like $780. One trade's like 2,000 some change, and the other trade's maybe like 3,100 some change. So you have about $780 on margin. Just to tiptoe into that world to experience it, because it's very similar to credit card lending minus the interest rate. Linda says, so if this is a losing trade, you will lose $50, or will you lose 5,266? Linda, you'd lose $50. If, of course, you followed your stop, right? If you got out. Yep, so you lose 50, not 5,200. Very good question, though. And again, that's what a lot of traders care about. ML Trade says, if the commissions won't eat up your profit, that's why traders don't like $50 gains. I agree. Commissions are a big deal. Have you guys heard of Robinhood? Again, if you're a newer trader, Robinhood has 0 commissions. It doesn't cost you anything. There's no margin, and no, I'm not getting paid to endorse them. They do not allow margin, and they do not allow short trading. You can only trade bullish, but there are no commissions involved at all. If commissions are eating you up, contact your broker and have them lower the commissions. You can easily lower commissions by a phone call these days because there's a broker war going on. Just, I think it was 3 or 4 months ago, 80% of brokers lowered their rates by about 35% or more. Because Tastyworks is coming in and Robinhood offers $0 commissions on stocks. This is a great broker for the beginning trader, or the younger trader, or the trader who has a smaller account, or the trader who's just starting. You can only trade stocks, not options. That is correct, at least presently. Tastyworks, right? They have a really good broker platform. Doe. There's a lot of good platforms that are coming up that are offering cheaper and cheaper and cheaper and cheaper commissions. So if commissions is your issue, if you're spending $9 in and $9 out, then yes, you want to avoid that broker if you're trading stocks. David says, can you open cash for the Robinhood? Yes, they do not allow margin, so you can only do a cash account. But all I'm getting at is, ladies and gentlemen, at the end of the day, there's a lot of opportunities. Avery said, not in Canada, we are fleeced. Tasty Trades will eventually come to Canada. Interactive Brokers is a great broker for Canadians. That one's pretty solid. You can use IB, Interactive Brokers, and they offer really cheap commissions. Just something to consider. They do have a $10,000 minimum deposit, but it's a good broker. Jill said, some commissions in Australia are $20. Wow. Well, that's also because, if you're trading international shares, right, Jill? I hope that's not trading Aussie stocks. That would be horrific. $20 in and out. That is brazen. That is highway robbery. I mentioned margin a little bit in class 2 and 3, the beginning classes, if you want a refresher on that. What I'm trying to get at is don't let margin scare you as bad as it sounds. Because when a lot of people use margin, what you have to kind of understand at some level is that the people who do use margin, if they lose money, like a lot of money, like tons and tons of money, it's because, Linda, they did not use stops. That's why stops are important. That's why stops are your friend. It's kind of like the whole don't drink and drive thing, right? Most people go, yeah, don't drink and drive. Drinking and driving is really, really stupid. You get in trouble, you get in an accident, don't do that. But yeah, a lot of people are like, well, you know, I don't really care about how much I'm gonna lose on this trade, so whatever. So if you're on margin and this happens and you don't use stops, yeah, you can lose a lot of money. You can more or less lose double what you put in. So that's a problem, right? Issue number one. But if you use stops, if you go into the trade mitigating your risk, if you know worst case scenario, and secondly, if you do not trade over earnings without having a plan in place, right? Don't trade over earnings without having a plan in place, because that's when you can lose some money if a stock gaps up on earnings. If a stock gaps up on earnings and yeah, you can lose a little bit in that situation. So just something you want to keep in mind, something you want to watch out for, something that you want to really, really be cautious of is knowing when earnings comes out, knowing when they take place. And if you do have a margin trade over earnings, just make sure that you are mitigated. What I will often do in longer term investments, stocks that I like for the long term, I love margin. Love, love, love margin. Think about it this way. Let me give you just kind of like, let me just open your eyes for the next 20 seconds before, you know, almost the hour is almost already over. If I'm taking a trade like British Petroleum, and let's say I buy 1,000 shares and spend $33,000, I'm not spending all of that on my money. If I'm spending, if I'm taking that type of trade, I want to use margin in order for that trade to happen. You can only use margin, by the way, once you have soaked up all the buying power that you have. So for example, if you have a $100,000 account and you're in shares or equities and you only have $60,000 invested in stocks, you still have $40,000 that you can use before margin becomes an issue. I always am in margin because again, the interest rate is so low. If you can get a stock that pays a 3 to 5% annual yield, which there's tons of those, I mean, literally countless. If you can get a stock that pays a 3 to 5% dividend yield and you pay less than 2% interest on the margin, I mean, why wouldn't you? So usually what I do in this situation, if I buy a stock that I like long-term, that pays good dividends, like BP, for a longer-term investment, you'll hear me talk more and more about BP later. But in a scenario like this, once the stock starts moving in my favor, I will peel off some positions and remove some of the margin risk, right? So I'll remove some of the margin risk for you. In that situation where if you're in shares and you have, let's say 50% of your shares are on margin or 20% or whatever it is, you can sell those margin stock, the shares that were on margin, like, oh, cool, I made a profit on those. Now, again, I'm just in cash. And you can go use the margin to take another trade. I do that. That's kind of my approach very often. That works best for investing. And again, if I'm day trading, a lot of brokers offer 1 to 4 margin. Oh, how that is fun. That is so lovely. And truly, the commissions that I spent last year were probably 10 times more than what I spent on margin interest rate, just so that everyone's aware. I mean, the margin interest rate is so small, it's pretty rough. Luke says, can you lose more than 1 R even with a stop, aka a large gap? Yep, so that's exactly what I was talking about just about 3 minutes ago, Luke, is you want to make sure that you really understand if earnings is approaching, because if earnings is approaching, that's usually when the stock gaps, and you do want to have some type of plan or a protective plan going into earnings. Oftentimes, there will be a rare case where, yes, stocks can gap and they can gap over your stock and you can lose an R. But in many situations, maybe you lose an R, maybe you lose 2 R, maybe you lose 5 R on one particular trade, but you don't blow out your account. And that's kind of the objective, right, Luke? Is let's say, again, worst case scenario, right? Let's say you did a trade like this here on BP. And you bought this trade right here on BP, and your stop was right about there. So right about there, below that low, gap down, and your entry was here, stop was here, down there, 2 R loss, right? So yes, that can happen, but also notice that example was on earnings. So sure, it can happen, and it will at some point if you trade in the market. Eventually, you will lose more than an R on trading. But overall, if you trade semi-normal stocks, not some random biotech pharmaceutical company that's about to come out with something that, you know, the world's never heard of, that's revolutionary, that, you know, FDA approval and some crazy gap is about to happen, like this stock on PBYI. You got to know some of these things, and you know, in knowing these things, you got to be really, really cautious and careful that you're approaching it the right way, because this stock would have been great for a long, not very good for a short trade. Short trade meaning you want to make money as it goes down. Folks, the beautiful part is I can talk about this kind of stuff all week. If you're just now getting here, I apologize if I messed up the link. I think I did probably mess up the link. But the good news is I recorded it for everybody. You'll be getting all this information in about an hour's time. I'm going to be back here tomorrow from 5 to 6 p.m. Eastern Standard Time. Every day, Monday through Friday, 5 to 6 p.m. And if you have any questions, email me and we'll be happy to chat about it. Tech Giant Tuesday, right around the corner, 23 hours from now. I'll see you then. You rock. And until next time, remember, love life, live life, and trade it. I will see you later. Bye.